Patanjali Foods, that's the stock on our radar. Jefferies has turned bullish on the stock. In fact, they've initiated coverage on the stock. The buy rating, target price upwards of 2050 is what their target price is. They expect near double-digit top-line growth coming in for the company, along with margin expansion as well. So to discuss this and talk about the growth outlook, we have Sanjeev Asthana, who's the CEO at Patanjali Foods, joins in now. Thanks a lot, Mr. Asthana, for joining in. Before we get to this business, I just want you to, for our viewers, set the record straight on the insurance foray that has come in from Patanjali Ayurved and has nothing to do with Patanjali Foods. Please, you do it yourself.
So that's absolutely right. It's got nothing to do with Patanjali Foods, the parent company. That's what's there in the marketplace. They are working on it, and we'll see. Of course, it is subject to all the regulatory approvals, etc. But Patanjali Foods per se, either in terms of involvement or otherwise, will have nothing to do with that business.
And no financial liability whatsoever either, right?
None at all.
Perfect. Thank you for setting that record straight. Let's get to business now. The last time you joined us, you did say that oil prices have been volatile. From the highs, we've seen a bit of a decline in edible oil prices, etc. as well. So far, how has business been? How has consumer sentiment improved over the last month? What kind of volume growth can we expect along with margins in your oil business in the fourth quarter?
So two sort of set of events are driving the change on the edible oil side right now. One, that we are clearly witnessing some bit of slowdown in the imports in terms of volume terms. That is more than made up by the oil inflation that we witnessed. But broadly, for the year, we are pretty confident of still meeting between 2 and 4% of growth target on the edible oil volume. Pretty confident about exceeding 4% plus of EBITDA margin on the edible oil side. On the FMCG regular businesses of foods and non-food, there is some slowdown we see in the urban area, so that continues. But broadly, we are pretty much within the ballpark range of 8 to 10% target that we are on the food side. The HPC business is still integrating. The first full quarter we'll see in this last fourth quarter now. And pretty much we are on course to achieve 15% growth on the HPC side next year.
Right. So, let's revisit some of those numbers. You said that 4% EBITDA margins in the edible oil business will, maintain. Is that on the cards? And 8 to 10% in FMCG food segment. Will that happen in the fourth quarter, or that's a more medium-term sort of target?
That's pretty much for the annual, business itself. So pretty much on course to both the numbers. And, there's nothing that I foresee now in the balance part of the March for anything to come in which can dramatically change that. There might be minor changes here or there, but pretty much on cards that we should achieve both the numbers.
HPC business, you had earlier targeted about 900 to 1,000 crores in FY25. Will you meet that? And 3,000 to 3,200 crores in FY26?
So that's pretty much on the cards, as I mentioned. So we feel pretty confident about 15% growth rate next year. So that should pretty much take us to the numbers that you mentioned. And this 15% CAGR allows us a lot more, headroom for expansion that I clearly see in non-oral category as well. So oral is a fairly dominant part of a category. We're expecting that pretty much in the home care, personal care, and hair care, also for that expansion to happen now, under the fold of Patanjali Foods now. So next quarter onwards, which is first quarter of next fiscal, we're pretty confident that we should start getting back on stream and build up that 15% growth momentum in the business.
Just a couple of more questions before we let you go, sir. One is on the oil palm plantation. The street believes that this could actually be 20% of your revenues and a decent contribution to your EBITDA as well. When does that happen, and what are your near and medium-term targets here?
So it's happening, every year. Every year, our EBITDA run rate, what used to be about 160, 170 crores, we are upwards of, somewhere around 220 crores odd we make as an EBITDA. So every year that is spiking up. But the big growth in the EBITDA and the contribution to the revenue shall happen maybe in 3 years' time, when all the plantation that momentum that we have of last 2 years, I think will start to fruit. So pretty much from 28, 29 onwards, you will see a big expansion. And that the estimation is broadly that, if the run rate of our targeted sort of plantation size, the margin expansion that we expect to happen. So we should pretty much be nearly 3 times of where we are today in 4 years' time, and pretty much 5 times of where we are today in 8 years' time.
Right, and final question. This is with regards to some of the regulations and macros in general. We heard the Prime Minister speak about, people wanting to reduce, or him wanting people to reduce their intake of oil, etc. Would that be a macro risk to the underlying growth that we're seeing in the oil business? And there were some run-ins that came in from the FSSAI as well. This was specifically on your red chili powder business. So these two continue to remain a bit of risk or the overhang on demand growth itself, right? For oil, if the underlying business itself is not likely to grow as fast because people are staying away from that, could that pose as a risk? And secondly, the risk of regulations, that people move away a little from packaged foods in general.
I'll address both the questions. So one is what Prime Minister exhorting people to reduce their consumption of edible oil. That is, of course, I think from a health perspective or otherwise, I don't think there's any fundamental shift in reducing the demand per se. And I don't believe that is going to have a big impact. On the per capita consumption, we are significantly lower than the evolved markets of the West and even our Asian peers also. So there's a lot of headroom for growth. And I don't believe that, anytime soon that any substantial reduction, voluntarily or otherwise, will happen on the edible oil consumption. And on the red chili powder, we have already issued, the clarification. It was a very small sort of lot of, which had a problem. Most of it, we have recalled already. And that was pretty much led by, certain challenges which Indian spices had in Singapore and Hong Kong earlier. And so it was part of that process. So we withdrawn. It was very, very small lot and part of a much larger business portfolio. So those are things behind us. And I think, once in a while, this may happen. But pretty much we're working in terms of removing this completely so that quality should not be an issue on any product that Patanjali brings to the marketplace.
All right, we'll leave it there. Thank you very much for taking out the time, speaking with us here at CNBC TV18, and speak to you again soon, sir. Good luck. There is Patanjali in focus. Well, look at